Hello and welcome everyone. Happy Friday. Hope everyone's having a great week so far and hopefully the weekend's even better for everyone. So I just want to say my name is Alexis Rogers. I'm the customer relationship lead here at RightCapital, and I'm very excited to be presenting with you guys here and exploring some future asset purchases with you guys. So our goal for today is to just help you feel more confident using this tool and utilizing this to the best of your capability to look at and implement different options for future asset purchases within RightCapital. So some of the things we're going to be going over today is we're going to be looking at exploring future asset purchases in the current plan. We're also going to be looking at proposing future asset purchases in proposed scenarios as well. So we're going to be going over all these key aspects today. And I also want to go over with you guys some of the key assumptions that impacts future asset purchases within RightCapital as well, so just so that you're aware when you are proposing or looking at future asset purchases, what those settings will do to your proposed scenarios and into your current plan's goals. We're also going to be looking at navigating the cash flows and just doing some analysis and what it looks like in terms of reporting for those future purchases as well. And then at the end, I would be more than ecstatic to answer any questions that you might have. And so if there's any sort of scenarios that you might be looking to be modeling or just have questions throughout the presentation, please feel free to navigate to the GoToWebinar panel and utilize that questions menu drop down to drop your questions there. And I'll be more than happy to assist in just answering any of those questions, or maybe even walking through the process of modeling somebody's scenario that they might be looking at today. So just give me 1 second while I just pull up the plan for you guys. Perfect. So just to start off with where we would navigate first to view some of the key assumptions that goes into future asset purchases within RightCapital. So if you log into RightCapital, you'll see your client list. The first thing that we want to look at today is under the assumptions tab here. And then under inflation, here we will see a key assumption that goes and plays a vital role in how we are going to be treating future asset purchases. So as you can see here under assumptions, inflation, there is a setting that you can check off that would indicate whether or not for these following categories, if anything that we indicate for a future goal will inflate today and in between today and the start date. So say we have a future home purchase happening in 10 years. If we check the setting off, that means that this goal will inflate with general inflation between today and between the goal occurs. So for a home purchase, it would be growing with the depreciation value of the home as indicated, but for other ones, it might be different inflation figures depending on the type of future category that you're adding. So for goals, if you want it to be inflated between now and when the goal occurs, we'd keep this selected. But say you didn't want to have it inflated for the most part, you would deselect this and then hit save. And then going forward, any goals that you enter would not be inflated. There are some exceptions for the rule, such as annuity purchases, business or a real estate income. Certain purchases would not be inflated, even if you had this selected, and it's notated over here. So if you ever had any questions and just want to verify, this little info mark here provides some further insight as to what this setting does. So today we are going to be working with one of my favorite sample plans, Michael and Holly Scott. For those who are The Office fans, will be quite familiar with my presentations on Michael Scott and Holly Scott. So just starting off with the process of inputting future asset purchases in the current plan. To add some future asset purchases, we navigate first to the profile section, which is where we input anything that we want to have impact the current plan. So under profile goals, we go into the add goals dropdown. And then let's say that Michael Scott is looking at potentially purchasing a vacation home. He's got it planned out. In a couple of years, he wants to purchase a vacation home. So we click here and add goal, property, and then let's enter a vacation home purchase for the Scotts. So let's say he wants to purchase a vacation home of maybe $350,000, and he wants to do this in, say, Florida. So he's going to get a nice vacation home down in the Keys, going to be growing with 3% appreciation. Enter some property tax, no, some insurance, and then let's enter some maintenance as well. And then let's say he's going to be taking out a mortgage to finance this vacation property purchase. We can utilize this down payment field here, this term field, and interest rate to indicate the parameters of this financing. If this was the scenario in which he was going to pay for this property purchase in all cash, what we would have done is we would have left this at 100% down payment, and then there would be, of course, no loan taken out, and we would see the full $350,000 in today's dollars as a goal in the future. Since we're going to be looking at this and knowing that Michael's actually going to be financing this, we're going to input the terms for a mortgage. So let's say he's going to put 20% down. He's going to have a term of 15 years. And let's say he has a little bit of a higher interest rate, which is kind of more the case for today's market. So that's probably playing it a little bit safe. And then we'll click save. And so what we just did is we just added this vacation property purchase to the current plan. But let's say we have some additional goals that Michael is looking to purchase as a part of his current agenda. So let's say he also wants to purchase a car in the future. You know, maybe his existing car, it's, you know, maybe 15 years old and he wants to upgrade it. You know, it's just time for them to get another car. So what we do is we click on this add goal drop down again. And then as we can see right here, there is a car option. And within this lifestyle card, we have a couple different options that we can select in terms of how we're going to approach purchasing this car. So if he's going to be outright buying this car, just in all cash, we can leave this buy or lease field here to buy. But let's say they're going to follow a different option and he's actually going to be financing this purchase. So let's say he's going to be purchasing his dream car, and maybe it's just a little bit more expensive. And with the car prices that they are today, this can be quite the hefty cost. So he's looking at actually just financing this. So what we do is from this dropdown, like I just did, we'd select finance. And then similarly to how we have the property purchase parameters for a mortgage, here you'll see once you select finance, the parameters for a loan here. So we'd indicate the down payment, the term for this car loan, and the interest rate as well. But if it was the case that he was going to be leased, we do also have the option here to indicate future car leases. So in the scenario in which somebody does frequently lease cars, you can utilize this lease option and then start to enter the parameters for this lease, including the residual value and the down payment, the term, and interest rate. And even more importantly, typically when people lease, if it's something that they consistently do, you do have the option to indicate the timing. So let's say that he purchases he takes out a lease once every 3 years. What we do is we can select here from this frequency dropdown how often this goal would be occurring. So if he would re-sign a new lease every 3 years or maybe every 4 years, he maybe takes a break from leasing, we can select from the frequency dropdown every 4 years, and then we'll see this goal ends field populate. And we can begin to enter the time frame for when we expect him to continue to lease cars. So as we know, maybe leasing might not be the goal for the entirety of his life, but he's just maybe he on the side is a car salesman and he likes to lease more often than not and keep upgrading to newer cars. So let's say he was going to be doing it until 2030. You can enter this time frame here, and that means that every 4 years we would see a new lease taken out until 2030. But let's say he's going to actually be financing it, kind of like the first scenario, and it's just going to be a one-time purchase, and he's going to be purchasing his dream car. Let's say it's going to be $75,000 next year. And you can leave that alone, and then we'll hit save. So that's just one way to add a car purchase goal. And as you can see, there's a lot of functionality when it comes to this car goal card. But let's say he also has other asset purchases in mind. Let's say he is also looking at purchasing maybe a boat. Michael and Holly are going to pursuing their dream of going sailing in their retirement years. They're going to use their vacation home maybe in the future in Florida, and they're going to have a boat there as well. So let's click on this add goal button, and we'll see this drop down populate, and we can go down to this asset purchase field, and we can select lifestyle asset purchase. So this card can be used for a lot of things. This is kind of a catch-all card. So for my purposes in this scenario, this is going to be used for his boat purchase. But this can be used for other lifestyle asset purchases, of course. So maybe if somebody purchases a lot of really expensive collector's art or collector's stamps, anything along those lines that you might want to be accounting for, and it's going to be just a type of an other asset. This lifestyle asset purchase card can serve as a tool just to account for that, in the net worth, and then illustrate those costs in the future. So for Michael Scott, let's do this boat purchase. Let's say he's just getting a smaller boat. He got a really great deal. It's $150,000. And he's going to be doing this in 2030. One of the great functionalities here is you can also indicate that this is going to be a depreciating asset. So as we know with boats and certain other assets, those typically might not be appreciating every year. You can indicate with this annual appreciation field a negative appreciation. So with this boat, let's say it's depreciating 5% every year. So we can enter there negative 5%. And then if he's going to be paying fully outright cash for this boat purchase, we would leave this to 100%. But let's say he's just a fan of taking out a lot of loans. So he's going to be financing this boat purchase as well, maybe doing 25% down. Going to be a shorter loan of 5 years. And then maybe let's do an extremely small interest rate here with no early payoff. And we can indicate that, maybe he's going to be selling it after 10 years. So here we also have the cost of sale field. So in the event that we're going to be illustrating this being sold within their plan, as we know, there are oftentimes closing costs or anything along those lines when it comes to selling an asset. So if we wanted to account for any sort of cost that might come with putting this on the market, or any fees that if you had to get, for some reason, somebody else to sell this for you, there are oftentimes fees involved. This is where you'd indicate the cost of sale in the future. So for this case, Michael can just, sell this himself. He might know a guy 10 years from now that might want a boat. So we'll just keep that to 0, and then we'll hit save. So this is just one of the ways that we can add another type of asset purchase in the current plan. But let's start to look at the possibility of proposing asset purchases. So we've covered what he plans on doing in his current baseline plan. And so let's start to propose different asset purchases and see the impacts to his proposed scenario. Here in the retirement analysis section, we can start to build out that proposal. So as you can see for his proposed plan, he's got a couple of different ideas here. But let's just reset this and start from scratch. So if you're ever playing around with the proposed scenario, here in the action items where you built out your proposed scenarios, and say you wanted to start over and reset everything back to the current plan, we have this reset button right here that you can always select. It'll confirm that you want to have all the action items reset, which will remove your proposed action items, your proposed changes to the action items. And I'm just going to click on confirm. And then it's going to reset everything back to the current plan. So I can just start from scratch and show that instantaneous impact. And, I was just playing around with different things here. So I might not necessarily want to have that be the proposed scenario. So for what we're going to be doing today, here in the action items, as we can see, we have those current plan proposed asset purchases or future asset purchases here in the action items already. So if I ever wanted to propose a different timing for the vacation home purchase or the boat purchase, here in the action items, we will see the opportunity for me to be able to propose these changes. So if I ever wanted to indicate here that this is going to be occurring, the boat purchase is going to be occurring actually in 2031, I could just manually type here 2031, and then hit refresh, and it would show that impact here. So it looks like it's actually better for them to be purchasing it a little bit earlier. So that's pretty great for them. It's we'll reset that back to 2030. So to propose a new asset purchase in the future, what we'd want to do is in these action items, we click on this edit button right here. And then here we will see the screen to add or remove action items, whether they be already existing in this list already, or to propose new items here via this add new items button. So when we click on add new items, we will see the similar fields that we would see in the profile sections or modules populate as well. And so what we're going to be focusing right now is going to be under this goals section like we were just in under profile. So let's say Michael and Holly are looking at actually the idea of moving down into their Florida vacation home in the future. Maybe they don't want to be living where they are right now. You know, they're in a higher tax state, so they want to enjoy some less aggressive taxation in their retirement years or in a couple of years. So what we do is click on add new items, goals, and then we go to property, primary home relocation. So with this primary home relocation card, you have a couple different options for how we're going to be approaching what their new primary home is going to look like. So in this scenario, we're not going to be purchasing a new home. So as we can see, it defaults when we have a primary home relocation to the idea of purchasing a new primary home. But for Michael and Holly Scott, they are going to be moving into an existing home. So when we click on this buy a new home drop down right here, we can see a couple different options populate. But for today and right now, we're going to be selecting moving into an existing home. And then we can select which home we're going to be moving into if there are multiple. So as we know, they're not going to be moving into their existing primary home. They're going to be moving into their vacation home. So we'd select from this list Michael's vacation home. And then we can indicate when this is going to be occurring. So let's say it's going to be in 2040. Here under current home, as we can see, we have a couple different options for how we would approach what we're going to be doing with the existing primary home. So for the default, it's going to be that we're going to be selling the primary home at the time of this goal. Or we can indicate that we're going to actually be converting it into a vacation home so they could maintain that, their Massachusetts property and still live in their Florida home. So they can turn that into a vacation home, or we can convert their current primary home into a rental home. So let's say that that's going to be the situation here. We'd select convert to rental home, and then we can start to enter the parameters for what they would start to receive in rent from that previously primary home. But they're actually just going to be selling their existing primary home, and they're just going to be moving straight into their vacation home. We would just keep this selected and then hit save. And then let's see how that impacts their probability of success. And once you look at that, it greatly increases their probability of success, most likely because they're going to be selling their larger value primary home and moving into a downsized condo in Florida near the Keys. So that's pretty great for them. But there are other ways that we can also propose different asset purchases. So let's say that Michael was looking at starting another business. So he's going to be purchasing a new business. And so we can illustrate proposing that business purchase by clicking on the edit button, add new items, goals, asset purchase, and then business purchase. So Michael's going to be starting Michael Scott's paper company, or he's going to be buying into it, I guess is the better way to say this. And let's say he's going to be purchasing it for $150,000. You can indicate here the purchase price or the actual cost that Michael is going to be incurring here under purchase price. And we keep Michael as the owner. This is going to be something that Michael's going out on a limb for and leaving his existing career and maybe going into this business over here. So we keep it set to Michael. And then for business type, we would keep it to LLC, but we also have the option to indicate whether this would be a partnership, an S Corp, or a C Corp. And this is very important indicators here as this determines the taxation for their business income if they are receiving it. And so here we can indicate when this is going to be occurring. So let's say this is going to be happening in 2026. And here you can indicate the appreciation for this business. So let's say, this has some rapid growth. We can indicate maybe 20%. And then here we can indicate if there are going to be any sorts of distributions from the business. So the key determination and distinction between annual income and annual distribution, when in doubt, you can use these info marks to view additional information. But when it comes to annual distribution, this is the amount that you're going to see as an inflow in the cash flows. Whereas this annual income amount is going to be the amount that you're going to be taxed on, but would not see in the cash flows. So this one is the amount that you're seeing as an inflow in the cash flows, but it's not accounted for in taxes. The annual income field is what you'd be accounting for taxation purposes. Typically, these two figures would line up, but there are circumstances in which maybe they're not receiving as much of a distribution as they are being taxed on. So let's say he was having a $100,000 distribution. We can indicate here that these two numbers are lining up, and this will not be double counting anything as we're accounting for here the taxes and the taxable amount, and then here the distribution we're accounting for the inflow itself. Here we can also indicate how much the income is going to be growing by, if at all, which hopefully it would be growing. So let's say it's going to be 3% a year. And then we can also indicate if we're going to be financing this business purchase as well. So we can indicate it's just going to be 100% cash. He's just buying it outright. And we can also indicate if we're going to be selling the business at any point in time. So let's say we're going to sell it, when Michael passes away. We'll keep this selected. And then we can also indicate if there's going to be any sorts of cost of sale as well. So let's say, he's selling his business in the future. This is probably going to need to have some sort of cost associated. So let's say it's going to be a 4% reduction of the proceeds. Another key thing too, if we are considering selling a business in the future, is the way we're going to be receiving those proceeds and how the business is going to be sold itself. So let's say he's not going to be receiving a lump sum, and he's actually going to be receiving payments for this business over a certain number of years. So you have two options here. You can either have the proceeds as a 1 year, one-time inflow, or you can have the proceeds of the sale distributed over a couple of different years. So depending on how the negotiations go and what the agreement is, you can select the different option here from this drop down. So let's say he's going to be receiving a lump sum for 4 years. And you can also indicate if there's going to be any sort of interest rate in terms of the business sale proceeds being sent to you, if you did agree to that in the negotiations for the sale of business. But let's say he's actually going to be selling it after maybe 7 years. So this would be how you'd indicate the business purchase itself. And then we click on save. And we incorporate that business purchase into the proposed plan. And this is just one way you can either prepare this before a client meeting, but you can also show this instantaneous impact if you do utilize the action items and show via this drop down. You can also keep this item pre-built, but you can have this be set to never occurring. And so let's say you wanted to show the impact of what it would look like in that moment and get that really visceral reaction maybe for what it would look like if we purchased this business and got this new income stream from Michael Scott's paper company. So from this drop down here for the timing, we can always just set this to that specific calendar year as well. And then we hit this refresh button, and we can show that instantaneous impact and the visual of what it looks like for when we do this business purchase in the future. So that's just one of the key things that you can propose in the action items and illustrate within a proposed plan. And as with everything that we also entered in the profile section, you can propose the same things in the future. So if you wanted to propose a car purchase in the future, or any sorts of property types. You have a bunch of varieties of property types available in the instance in which somebody was going to be, purchasing an investment property, a vacation home, or a land value in the future. You also have the option for home improvement goals. So if somebody's going to be building upon their house and adding some value, you can propose this all in the action items under retirement analysis and illustrate the impacts of maybe making those changes and following through with the scenario, or maybe even why maybe we shouldn't be, if they're spending too much on purchasing a lot of properties, you can illustrate in a proposed plan maybe why we need to tone it down and then start to focus on different assets. So there's a lot of functionality here in terms of proposing different asset purchase in the action items. And the same thing too with building out their current plan. So now that we have that entered in the current plan and we have our proposal built for Michael and Holly, moving into their Florida home, and then we also have his business purchase in the proposed plan, let's start to take a look at what it looks like when we are looking through their year by year. So when we go into retirement cash flows, under summary, we can view the year by year of their inflows and their outflows. And more importantly, we can also view their net worth over time under this net worth tab. And so as we can see in the proposed plan, they have a fairly high net worth throughout their entirety of their plan that is amassing a lot of value. And another key important figure here is under the account sub-tab. So under this account sub-tab, we can also see their invested accounts such as a taxable account and their 401ks. But moving back over to summary, if we wanted to see what it looks like for each year in terms of all of those goals that we've proposed and that we've accounted for in the current plan, we can view here particularly under goals, and then under, say, property, we can view the specific numbers. And so we can see that all the numbers that I input, those are inflating, over time, because we've indicated back in the assumptions tab under inflation that those are going to be not inflating. So we want to check that back off and then hit save, and then we'll start to see those goals inflate. When we open Michael's got back up, now we'll see those figures be a little bit different. But let's say you did want to maintain those future asset purchases and have them not inflate between now and when the goal starts, you would have kept that setting deselected. But for my purposes, I do want to see it inflate over time, especially with those car purchases, because as we know, the car market, it can be crazy, and I just want to be accounting for some growth within the next couple of years for those car purchases. So going back into retirement cash flows, under summary, we can click into the headers for each of these sub-tabs or subcategories to view a further breakdown of what makes up each of these items. So we're going to be clicking into goals and then car, and now I can see that the figures look a lot different and it looks a lot more to my liking. And the same thing too, you can view, they've got a vacation goal going on, but they do have their property purchase. And then they have their future asset purchases as well. So we can see here in the cash flows, the paper company being bought in 2026 as indicated, growing with inflation. And then we can also see we have the boat purchase occurring in the future. So this is just one of the visuals that you can see in the cash flows, but you can also see any corresponding, tax payments that would be occurring. For them, they do have fairly high tax payments, but I do have a lot of different income streams going on here. But if you wanted to see what it looks like, and maybe for this particular year, we can see that they've got a negative net flow from this right-hand column over here. This is an indicator that they're pulling from their assets to fund some of their expenses, and particularly these goals that I proposed, and in particular this future asset purchase of Michael Scott's paper company. So if we wanted to see where this money was going to be coming from, we can navigate here into the accounts sub-tab and then just verify, here where that money is specifically pulling from. So from this drop down, like I just did, you'd click on this ending balance by accounts and see this drop down populate to select withdrawals from accounts. And so as we can see, the system is pulling from their taxable bucket to fund that negative net flow. but we can also see this in net cash flows to see the total additions and the total pulls from their assets as well. So this is just one way to, account for and see what is exactly happening with their assets and with their inflows and outflows each year. And so as you can see with what I just did earlier was I was looking at these numbers and I noticed that something maybe didn't look right or to my liking. And that's why I noticed that inflation figure, that setting that we were referencing earlier, that was deselected. So my goals weren't being inflated as I wanted. So this cash flows can be a very useful tool just to make sure everything looks accurate and exactly how you'd want it in terms of the narrative for their financial plan in terms of cash flows. Another thing that I want to highlight that's a really useful visual in terms of going over this maybe with a client or just for reference, but here under maps, this visual here highlights specific years of the cash flows in an easy to view visual format. So, let's say we're going through this with a client and we wanted to show them where their money is going for a particular year, maybe in particular for when we have this large business purchase and all of these goals accumulating in 2026. And so maybe we don't want to show the client, this summary with everything that's incorporated here, because as you can see, this is a lot of information, and it may not be what you're wanting to discuss. You really want to focus on this business purchase, for example. We want to click here into maps, and then we can use this slider to go into that specific year of 2026. And this is just a way we can see, what money is coming in, their total inflows, and where that money is being funneled to. So as we can see, we have a lot of expenses going on. We've got their living expenses, their housing, all of their debt payments, and their rental and vacation home costs. But then we can also see that property purchase, their car purchase, and their asset purchase in the future. And we can also view the difference of the tax payments and what they're saving for this year as well, and the resulting negative cash flow. So this is just a nice visual. So that way, if you don't want to navigate through the entirety of the cash flows with a client, you have this option to present a visual as well via the sand key waterfall. But you also have the option here for a breakdown chart format of this year of the cash flows. So as you can see here, we have listed out each of the same categories that we would see under summary. So under income inflows, we can see that positive inflow, and we can also click into this down arrow for any of these options, for any of these items, and see a further breakdown of what is making up each of these inflows and each of these outflows as well. So say we're looking at this and we wanted to say, maybe we don't see the full makeup of what their salary is. They know what they're earning and who's earning what, but you wanted to highlight, this asset purchase is stemming from Michael Scott's paper company. We can select this and view this breakdown here. So this is just one of the key reporting visuals in the cash flows that you can utilize in a presentation or in a report if you wanted to have this focus on a particular year's cash flows and maybe not go into the nitty-gritty of the summary. So maybe this paired with the accounts tab or the net worth can illustrate that future growth, and particularly because they're going to be purchasing those business assets and different assets over time, this net worth tab can be a useful visual as well to illustrate the different fluctuations of their net worth throughout the entirety of their plan. And so one other thing that I want to go over too, when it comes to future asset purchases, you can create multiple scenarios and compare and contrast different ideas of future asset purchases as well. So let's say you wanted to compare the idea of this proposed plan with them, moving to Florida and purchasing this business in the future, and maybe compare that to the idea of them moving to Connecticut. So as we can see, I do have a couple different proposed scenarios already here, but let's say I wanted to add another scenario to maybe they're asking in the meeting, they want to see another scenario of moving to Connecticut or moving to Arkansas. So what we'd want to do is here we'll see this pencil icon, and we can click on this to add or remove plans. And so if I ever wanted to remove any of my existing proposed scenarios, you can always click this X button right here and then delete this proposed scenario. But if we wanted to add another plan, we just click on Add New Plan, and then we can retitle this to, relocate to Arkansas. And then we click this check mark right here to save the name change, and then hit OK. And then we would see it here as a possible option to start to create another proposed scenario. But for this scenario, I want to have them actually move to Connecticut. They're considering just transitioning from Massachusetts and then going into Connecticut, the neighboring state. I select Move to Connecticut, and then here in the action items, I want to turn off this primary home relocation right here that I created previously. So let's navigate here, and for this calendar year dropdown, we would select Never. And the same thing too, in this scenario, we don't want Michael to be purchasing this business because when he moves to Connecticut, he's not going to have that same business opportunity. So we'll set these both to Never, and then hit refresh. And then that will be removed from the scenario. But let's say we wanted to propose that they move to Connecticut and purchase a new home. We'd go down into Edit, Add New Items, Goals, Property, and then Primary Home Relocation. Let's have them move to Connecticut and purchase a smaller home compared to their existing home. And let's have them do it this year. That's a little high. And they're going to be fully paying it down. They're going to be using their current primary home's equity to pay for this home purchase. So we keep this to sell immediately, and we're going to indicate that it's 100% down payment, and then hit Save. And then let's just toggle back to the proposed plan. And then we're going to deactivate this primary home relocation. We'll click this to Never, refresh. And so now what we can do is we can use these drop downs right here to compare and contrast these two asset purchase scenarios. So as you can see, we have the probability success to serve as one of the key differences and key visuals in terms of comparing and contrasting these plans. So as we can see, if they follow the proposed plan, which we can use these action items here to see what is different with them doing these different asset purchases, saving a little bit less, and then retiring at different ages. With this proposed plan, they have a higher probability success in comparison to if they just move to Connecticut. So a key factor here is probably his business and having that larger stream of income, of course, for a couple of years and then selling that business and getting those proceeds. So this is just another key visual within RightCapital that you can use to compare and contrast future asset purchases, not only in the current plan, but also between two different proposed scenarios as well. So you have a lot of great tools available for your use to compare and contrast future asset purchases, and also just to account for them in the current plan as well.